remember thinking in my first ever job that the cab rides were so expensive, and that's probably the reason why I was not able to save enough. But then I get my first bonus meal, which is more than the next 6 months cab ride expenses, and I blow it all in a week because I felt like I worked hard to make this money and I deserved to treat myself. And I opened everything in my wishlist account and bought them all. I didn't understand why I was behaving like this, because it was same money, same bank account, same person, but completely different behavior. And then I came across this concept called mental accounting, and it all made sense. So in this video, let's take a look at why our brain is designed to work this way and how to make it work for us and avoid falling for this trap. So mental accounting was actually discovered by the Nobel Prize winner Richard Thaler, and it basically means that brain doesn't see money as a giant pool. It basically sorts them automatically into different categories, and each category has different rules. But get this, the categorization is not always based on logic. It's based on how the brain feels depending on the money's source. Imagine you want to go to a concert. You go to the concert venue and buy the ticket for 2000 rupees. But in all the hustle bustle, you actually lose the physical ticket and then you're not allowed entry inside. What? So would you buy the ticket again? A lot of people said no, because that would mean that they're spending 4000 rupees for this concert. Now let's consider another scenario. You reach the concert venue and you're trying to take out the 2000 rupees from your wallet to buy the ticket. You realize you lost your cash. What? So would you use your card to pay for this ticket? A lot of people said yes, actually. But if you actually notice, it's the same math. In both scenarios, we have lost 2000 rupees and we have to make a decision whether we want to spend an additional 2000 rupees for this concert or not. But if we see, the way the people categorize this money is very different. In the first scenario, all the money is coming from the entertainment budget, and that's why it feels so expensive. In the second scenario, because it's cash, it comes from general money, like separate money. So why does our brain do this? Basically, in human history, the source of resources was extremely important. Meat from a successful hunt was like a windfall. It wouldn't happen very frequently. They would have to consume it quickly because it doesn't get spoiled. And then resources like berries were more stable and had to be rationed properly to be consumed over time. Before the banking system evolved, people used to store money in literally jars. One jar was for groceries, one jar was for emergency, one jar was for entertainment, etc. And so our brain is now used to these categorizations and uses it on the money that we currently have. So if we look at numbers, for example, we get 25,000 as a bonus every year for 10 years. And then if we're going to use it like I did on a wish list, that means we're spending 2.5 lakhs over a period of 10 years. But instead, if we would invested this money and gotten like a steady return of 12%, then in 10 years, this would have been around 4.5 lakhs, and in 30 years of 65 lakhs. So how do we avoid falling into this trap, or how can we make it work for us? So the first one is pre-commitment. So before you get the bonus money, we can decide beforehand how we want to spend that money. For example, 10% for immediate enjoyment, 70% for whatever is our top priority, debt repayment or investment, 20% for something else. The 24-hour rule. So usually a brain takes 24 hours to make the categorization permanent. So immediately transfer the bonus money into the regular account. This forces our brain to classify it as regular money. The next one is that we make it a game and celebrate every time we're using money to pay off debt or to invest it. Another one is salary test. Before spending the money, think for like a second if you would have made the same decision if the money was coming from the main salary account. Another one could be actually using the mental accounting to our advantage and create a future me account, so that anytime you get any windfall money, you transfer it immediately to that account, and which is actually going to be useful for your future. Like self-improvement, self-development, taking up courses, joining the gym. So mental accounting isn't just about money. Our brain creates these invisible categories for everything. I noticed this, that I wouldn't think twice on spending 500 rupees on supplements or medicines, but I would definitely think twice on spending 500 rupees for buying like a gym pass. So once we understand how our brain is creating these invisible filing cabinet decisions, we can start redesigning our lives. This isn't just about financial decisions, but about being very mindful and aware of the kind of decisions we're making and how we're making them. So that's it for this video. I hope this helped, and see you soon in the next one. Till then, bye bye.